Picture this. You open your trading screen, expecting another quiet day in the forgotten edges of the small cap universe. But before you even take a sip of your coffee, you are hit with something so violent and so out of scale that you almost doubt your own data feed. And before we go further, there is a trading strategy segment later in this video that reflects the real market conditions. So stay with me until the end. If you are watching on Shorts, use the full version link below so you can hear the trading strategy in the later section without interruptions. On November 24th, 2025, Inno Holdings Incorporated, with the ticker INHD, a microcap that usually moves like a drifting shadow, suddenly behaved like a live charge thrown onto the NASDAQ floor. The prior day it closed near $0.73. It opened around $0.94. It dipped to roughly $0.80, and then without warning, it rocketed upward in a near vertical burst to about $3.45. More than 200,000 shares traded in a single session. A normal microcap does not behave like this. Under typical conditions, a stock in this category trades lightly with modest liquidity. Spreads remain wide. Even a mid-sized order can jolt the price. But INHD did not follow any normal pattern that day. The only way a move of this scale happens is when the structure supporting the stock is already primed with mechanisms that magnify volatility. To understand how we arrived at this moment, we need to trace the story from the beginning. In 2019, Inno Holdings entered the construction technology world with a focus on cold-formed steel framing, a process where thin steel sheets are shaped at room temperature through roll-forming equipment. In standard manufacturing environments, this requires staff teams, sizable warehouses, dependable supply chains, and logistics networks that can feed contractors on schedule. But Inno Holdings attempted to do this with about 4 employees. Instead of growing traditionally, the company framed itself as a technology-driven disruptor, relying on lean operations. One of its core inventions was a mobile factory, which was essentially a compact roll-forming line built onto a trailer. The idea was that instead of producing steel framing components at a large plant, you could bring the factory to the job site and manufacture nearby. Along with this, the company also sold prefabricated housing modules and caster cubes and provided consulting and incorporation guidance. It was an unusual mix. It looked like a hybrid between industrial manufacturing and a startup services firm, and that mix required flawless execution to scale. Revenues remained small. By 2024, the company was making under $1 million annually, and by late 2025, its trailing revenue reached around $3 million. Losses grew toward about $6 million. In a typical early-stage industrial business, management would secure credit lines, strategic partners,